The investment method I studied this week seems to have been analyzed from a more conservative perspective. This is a clip of Mr. Zhang's U.S. stock investment strategy necessary for the end of the performance season, posted on a YouTube channel related to U.S. stocks called Mijumi in Korea. He first introduces the stock market adage sell in May and come back in October and talks about whether this is true. This table is based on the 70 years of S&P in the United States from 1950 to the present. Averaged over a 6-month period, May to October has the lowest returns, as this stock quote says. And from November to April, the yield is the strongest. This table is for the last 10 years of sold in May and bought in October. It comes out a bit different from the data for 70 years. In 2011, it was the lowest at -8.1%, while in 2020 it showed a 12.3% return, which could lead to good performance. As you can see from these two tables, the stats are statistics and show that things don't always go along with these stats. It is just that the stock market from May to October, on average over the past 70 years, has been weak. You can't just think that it will be the case this year with just those statistics. So what will happen this year? This graph is the most important part of today's content. If you look at the S&P 500's earnings per share, it has increased a lot over the past 30 years. It means that the U.S. economy has improved that much. It means that American companies are making more money. If you look at the graph, the stock price of the S&P 500 is almost the same as EPS. In other words, the stock price is determined by the performance of the company. This is the most basic common sense. This common sense is U.S. stocks. In other words, Mr. Zhang emphasizes that if you buy a company with good performance and good guideline in the future, you can make a profit from your stock investment. This data is based on data from 1999 to 20 years. What this article is about is that if you set a good timing and repeat buying and selling to make more money, you can miss the best days. If 10 days are missed over 20 years, the return will decrease from 5.6% to 2.0%. If 60 days are missed out of 20 years, the return will be -7.4%. It is very difficult to pinpoint the best day. If you repeat buying and selling to meet this timing, you may rather miss some best days. Rather, the rate of return is more likely to go down. Therefore, it is highly likely that it is safest and will give the highest return without repeating buying and selling. This is the heart of this article. This table gives slightly different information. When you buy a stock, what happens if you buy it when the stock is all-time high? The result is that living all-time high yields better returns. The reason is that it became all-time high because the company's performance was good. If the performance is good, the stock price goes up. That's why this is what comes out. The U.S. economy is projected to continue to improve in 2021 and 2022. Then U.S. stocks can continue to rise. So, which stocks will rise? This graph shows that tech, media, telecoms, and Amazon are performing better than others. In particular, the chart on the right shows that the profitability of Facebook, Apple, Amazon, Netflix, Google and Microsoft is far better than other stocks. In other words, Mr. Zhang emphasizes that these Facebook, Apple, Amazon, Netflix, Google and Microsoft stocks are must-have stocks. This graph shows that the PER of U.S. stocks is going down. In other words, it is undervalued. That's why it means that if you choose companies with good performance and guidelines in this earnings season and buy them, you can make a profit. These are the companies scheduled to announce their earnings next week in their schedules. Please refer to both projected EPS and projected revenue. And on Friday, the U.S. Department of Labor releases the employment situation for April. Please also refer to the materials released on this day. That's it for today. Thanks for watching.